Today, mid-market, stocks are on track for their best quarter since 2009, helped by data showing inflation remains modest and hopes for a fresh round of trade talks between the US and China. However, the clock is ticking. So let's take a look. Today I got a great question from HeroDax. It was about my video on Ray Dalio and 1937 and the similarities between the current market. Now, this was done several months ago, and it was done prior to this top here. But in that video, I talked about once we got up to that point, it was possibly going to be a double top and the risks were going to rise. Now, this move here did head higher than the previous peak, yet we still had trouble. And now, again, we're approaching a period when I think we're going to have additional trouble. So I'm watching it very closely, and it's right there. And as I discussed, I believe last week, to me, it looks like a head and shoulders pattern. Here's the right shoulder. And of course, this is the head, and I'll complete that a little bit better for you. And then the left shoulder. So here's the problem as we go down here into the MACD, that we had these two peaks here, and that's a double top in my opinion. Fast line did move through the slow line, and we're coming up from under. Now, we were successful in this move there, and we were successful in that move there. But in my opinion, this pattern is very, very dangerous because things can happen like that entire downtrend, like this downtrend, or like this downtrend. I don't like seeing the fast line move like this and head up from under when the market seems to be waning, when some of the power in the market seems to be dissipating. So let's go into the weekly charts and I'll show you what I'm talking about. So now we're taking a look at the 2-year weekly chart on the spiders. Now, in my response to HeroDax in his question, I indicated to him that tomorrow, Saturday, I'm going to have another video that has to do with comparisons of historical charts. I think you will all find it interesting, so I suggest you take a look at that video. It's not a shameless plug. I think it might be somewhat interesting for you. All right, so here we are today. What I mean that the market is starting to lose some power, it seems to be dissipating, is clearly we are moving up here into this point here, and it seems like it's doing a little bit of a rollover. Now, something could always happen positively, say with the trade talks between the US and China, but that might be a little bit temporary. So right now, it looks like we are losing some steam in this area here. So looking at the head and shoulders, again, here's the left shoulder, here's the head, and then the current time frame is the right shoulder. Now, it's never perfect, so don't think that this level here has to be exactly at that height here of the left shoulder. So what I want to see is, first of all, to get above that left shoulder and then to proceed above the previous high here. And we seem to be having a little bit of difficulty in doing that. Moving here into the MACD, we can still see, though, that the fast line has moved above zero. The slow line is about to move above zero. And we continue to move higher. No real sign of a dissipation in the market, at least by this MACD. Now, the histogram shows a little bit of some of that dissipation in power. We definitely seem to be moving on over and perhaps a little bit to the downside. Again, that can always change, and we can continue to move sideways such as we did here in that level, but that remains to be seen. So we'll be watching that. Moving down here into the price rate of change, we had that reflection here, and we're heading on up. So that's nice and strong. And the slow line is moving above that zero line as well. So nice and strong. I like to see that. Relative strength was a little bit weak, still is a little bit weak, has a potential sign of topping here, but we do have this reflection, and so maybe that reflection is going to continue moving on up. I hope so. Now, the stochastics, we see that things are again signs of dissipation in the market. And we've got a fast line that's very near that slow line, but it seems to be getting a bit of a reflection up. So hopefully that will continue as it did in this time frame here. So I'm thinking we still have plenty of time here for the market to continue moving up before there is a stumble. But we're looking for that stumble if it does occur. Volume looks fine. And the Williams looks okay, but again, a little bit of a topping process, so we need to see this sawtooth continue to move on up here and then just complete another one and perhaps maybe head down sometime in the future and continue the sawtoothing that we've seen before in that time frame there, as well as this time frame here. That's a strong market when this can stay above in that overbought territory and continue to sawtooth. That's just a little bit of volatility in the market, never hurt anybody. But it does show once it's still up in that overbought territory, that things are moving and are relatively strong overall, even if we do see a little bit of dissipation of that power. It can hang up there for a long time because something in the market may occur. Again, perhaps successful negotiations between the US and China to keep the market heading on up. So we're watching that, but we're in a time frame that we really need to take a close look and analyze this information to see if there are any signs of a break in the market. Last week we had a little bit of trouble, but it seems that we're continuing on this week, and it looks like next week, for the most part, will also continue. So please watch that video tomorrow. I think it'll be interesting for you. And for today, that's ChewDog Charts. Thank you.